Let's take a look at one of the most popular dividend ETFs out there in the market right now. Let's take a look at SCHD, which is the Schwab U.S. Dividend Equity ETF. So let's get right into it. Hit that subscribe button, ring that bell if you want to be notified on more investing and trading content. So let's dive into SCHD. Now this is an ETF offered by Charles Schwab, and you're going to be able to buy this on pretty much any brokerage you use. Now right off the bat, the expense ratio is on the lower end. It's 6 bips, 0.06%, which is really good. Now the objective of this ETF is to track the U.S. Dividend 100 Index, the Dow Jones U.S. Dividend 100 Index. So this is going to be investing in companies that are value oriented, blue chip stocks that offer dividends that are offered in the Dow Jones 100 Index. Now we look at the fund details, and this really isn't that important, but right now the stock price is $72 a share. Now the fund was created in October 20th of 2011, and its current net assets is $47 billion. In total, you're going to be invested in around 104 stocks when you buy this ETF. And the Morningstar category, which isn't surprising because this is Dow Jones stocks, is large value. So you're looking at large cap value stocks when you're buying the SCHD. It's traded on the New York Stock Exchange. And if we take a look at the market cap for this ETF, we're at around $150 billion. Now, if we look at the top holdings, these are the stocks that are currently at the top of the list for SCHD. But this is constantly changing as companies grow and increase their weighting in that Dow Jones 100 U.S. Dividend Index. So the companies we're looking at that are currently at the top include Broadcom, Merck, Verizon, Texas Instruments, UPS, Cisco, Home Depot, Pepsi, Coca-Cola, AbbVie. So we ended the list at AbbVie, but then we pick it up with Chevron, Amgen, Pfizer, Lockheed Martin, BlackRock, Altria, Illinois Tools, Blackstone, Ford, 3M, Kimberly-Clark, U.S. Bancorp, Valero, Newmont, Fastenal, Allstate, T. Rowe Price. The list goes on, and let's just filter through these so you can see the stocks that are included in this index currently. Now, if you want to start buying SCHD right now and you do not have a brokerage, you can try Webull out, and if you use the affiliate link down below in the video description, you'll get up to 12 free stocks. Deposit $100 and this channel will be rewarded, so I highly appreciate it. Webull will allow you to buy fractional shares of SCHD, buy it on a recurring schedule, so you just continue to dollar cost average and build up your investment. Now the current 30-day SEC yield, or the dividend yield for this ETF, comes in at 3.64%. But here you can see the dividend yield history. Back in 2013, it was around 2.5%. In 2015, it was 2.9%. In 2020, it was 3.16%. And the current yield, as we said, is 3.64%. And if we look at the dividend growth over the last 10 years, we can see that it has been increasing every single year, which is a good sign to see. So they're increasing the actual dividend, but in some years, the dividend yield might be higher or lower depending on the way the stock is trading and its share price. A lower share price with the same dividend payout is going to be a higher dividend yield. So now let's compare SCHD against VOO, or the S&P 500, and see how it stacks up. So we are going to include year to date, and just something so you know, the Dow Jones has not performed well in 2023. If we look at the S&P 500 year to date, it is up 16.51%. And if we take a look at the Dow Jones Industrial Average, we can see that it is only up 3.87% year to date. Keep that in mind when we take a look at these results, because there is a year to date skew to the S&P 500 right now, which is the VOO. So we'll go back to 1985, we'll include year to date, and we're going to say it was a $10,000 initial investment. We are going to contribute a fixed amount. We are going to contribute $500 every single month. So we're going to change this contribution frequency to monthly. We are going to inflate We are going to adjust for inflation. We're never going to rebalance. We're not going to use any leverage type. We are going to reinvest those dividends because that's extremely important with a dividend ETF. We are going to display income, which is going to be how much you're getting paid through dividends. We're not going to include a benchmark, and we're going to change the portfolio names to custom. This, we're going to say it's VOO, and this one is SCHD. VOO is Vanguard's S&P 500 ETF. So asset number 1 is going to be VOO. Asset number 2 is going to be SCHD. Portfolio 1 is going to be entirely allocated to VOO. And portfolio 2 is going to be entirely allocated to SCHD. And we're going to see that it's giving us results back to 2012. Which makes sense because the fund was created in October of 2011. So this data can only go back so far. Now, if we look at the final balance, VOO is higher. And keep in mind that year-to-date difference. But SCHD is at 190,000 while VOO is at 203,000. Now, the compound annual growth rate is very high. It's 29.94% for VOO and 29.16% for SCHD. That's because we continue to contribute $500 every single month through the good and the bad. And that's going to increase our CAGR because we're buying when things are low and seeing that grow. And that is going to increase the compound annual growth rate. Inflation adjusted CAGR for VOO is 26.61% and 25.86% for SCHD. Both of those are great returns. Now, the standard deviation is 14.32 for VOO and 13.73 for SCHD. What does this mean? Well, the lower the standard deviation is, the less volatility you're experiencing. So what this is saying is SCHD is going to be less volatile than VOO. Now, the best year for SCHD was 32.89%, and the best year for VOO was 32.39%. Very comparable. What's very different is the worst year. VOO, negative 18%, where SCHD was negative 5.56%. And the max drawdown is similar, but not surprisingly, SCHD has a lower max drawdown at 21.54% compared to 23.91%. That's because of that standard deviation being a little bit lower, so there's less volatility, so you expect less drawdown. Now, if we look at annual returns, we can see that in 2023, VOO is up 16.85%, while SCHD is down negative 2.15%. That's that big performance difference we're seeing between the S&P 500 right now and SCHD. But in 2022, SCHD was the better performer, only dropping 3%, while VOO dropped negative 18%. This is that volatility that SCHD isn't really experiencing. Now, if we look at portfolio income from dividends, VOO does have a dividend yield and it's around 2%. We can see because SCHD has a higher dividend yield, it's going to have a higher payout. So in 2021, SCHD was 5%, so in 2021, SCHD was 5,000, while VOO was 2,500. So when we take a look at this results, what conclusion can we make? Well, SCHD is a viable option. You're not going to experience as much returns because VOO, the S&P 500, is going to have some more growth in it. So you're most likely going to have a larger final balance if you hold this for the long term. But SCHD has a very comparable return, has a very nice dividend, and has a little bit less volatility. So if you're looking for a dividend ETF, SCHD might be the one. So I want to modify this slightly to see how much SCHD has grown without any dividend reinvestment and without any contribution. So we're going to change this to no, we're going to change rebalancing to no rebalancing, cash flows to none, and then we're going to analyze this portfolio. So here we go. We're looking at SCHD at $27.7 thousand versus VOO at $35.4 thousand. The CAGR is 9.28% for SCHD and 11.6% for VOO. This is a number that I wanted to get because now we can use this number to estimate what a future portfolio would be if we were to invest in SCHD right now. What we also want to take a look at is the annual payout growth year over year, and we can see that 10% is probably a good estimate. So now we're at market B and we're using the dividend calculator, and we're going to take a look at SCHD to see what an investment today might net in the future. So we're going to assume we're going to start off with $10,000, and that's around 135 shares at a share price of $73. Now the annual contribution, let's keep it at that 500, so that would be $6,000 a year. And we're going to say a 10% annual dividend amount increase per year based on that history that we saw, and a CAGR of 9.5%. And let's say we invest this for 30 years and calculate the dividends. And here we can see how reinvesting our dividends and adding that annual contribution, how that impacts the amount of shares that we own and our dividend payout. So in year one, we have 135 shares. Our annual contribution is $6,000. So at the end of the year, we own 213 shares of SCHD, and our annual dividend is $361. In year 10, our annual dividend is $4,600. We own 784 shares, and our balance is worth $142,000. So within 10 years, you own over $100,000. It's only going to take you to year 8 to get that $100,000 benchmark in SCHD. In year 20, the annual dividend is $20,000. Your final balance is over $500,000, and you own 1,300 shares in SCHD. In year 25, your annual dividend is $40,000. You own over $1 million worth of SCHD, and you have close to 1,600 shares. In year 30, your annual dividend is $78,000. You own 1.9. You own $2.1 million worth of SCHD, and you have a roughly 1,900 shares. Now let me know down below in the comment sections what you think about this ETF. Are there any other dividend ETFs that you really like? And if so, we can compare them to SCHD in the future in future videos. If you want to support this channel even more, you can join the private Discord. A link is down below in the video description under the Patreon. It is on this private Discord where we talk about stocks every single day. It is on this trade channel alert where I post whenever I get into a position, a trade position, because I also do trade the stock market. Members post whenever they get into trades as well. There are watch lists, there's a general chat, and there is a news feed. That concludes this video. I thank you so much for your time. I'll see you on the next one. This is We Are Investing, and I'm out. See ya.